Welcome to Crypto Plus Insights, where real-time blockchain data meets smart crypto analysis. No hype, no guesswork, just pure on-chain insights to help you trade with confidence. Today is May 15th, 2025. Bitcoin is trading around $103,500 at the moment. After some recent market dips, it has shown strong signs of recovery and is gradually climbing back toward the $104,000 mark. But what's really happening behind the scenes? Let us dig into the on-chain data that tells us how the market is truly behaving beyond just the price action. Major investors, commonly referred to as whales, are actively accumulating Bitcoin. Wallets holding more than 1,000 BTC have increased in the last few days, a very strong signal that institutional players are entering or reinforcing their positions. On Glassnode and CoinGlass, we see clear evidence that whale wallet accumulation is picking up pace. When these big players start buying, it often means that they foresee a big move ahead, usually a bullish one. However, there's another side to the story. A small portion of long-term holders have recently started moving their coins, likely to take some profits as the market hits new local highs. This isn't necessarily bearish, it's a natural market behavior, but it does suggest we may see some volatility in the coming days. Let's take a look at the net exchange flows. Over the past 48 hours, we've seen more BTC leaving exchanges than entering. This indicates that holders prefer self-custody right now, which often means they're not planning to sell soon. When BTC moves off exchanges, it creates supply pressure and can lead to upward price movements. Meanwhile, the Bitcoin Fear and Greed Index is stabilized in the greed zone. This suggests that investor sentiment is optimistic, but not overheated. It's a healthy sign for a gradual upward trend. In addition, funding rates across major derivatives platforms like Binance and Bybit are mildly positive. This tells us that most traders are still betting on the price to go up, but we're not yet in the over-leveraged danger zone, which is good. Looking at the MVRV ratio, the market value to realized value, we are in a neutral to slightly positive zone. This is usually a good sign for long-term bullish momentum without being in an overbought territory. Now let's talk predictions. If this trend of whale accumulation and exchange outflows continues, analysts believe Bitcoin could push toward $120,000 in the next few weeks. Some even forecast a move toward $150,000 or more by the end of Q3. A key reason behind this optimism is the upcoming spot ETF approvals in several countries. Institutional inflow is expected to increase once regulatory clarity is achieved. We are also seeing more developing nations legalize or integrate Bitcoin into their payment infrastructure. This will likely bring fresh retail interest and long-term adoption. But remember, the road won't be smooth. Short-term corrections are part of every healthy market. Sharp price moves may happen due to macroeconomic data, unexpected regulations, or profit-taking from large holders. So what should smart investors be watching right now? 1. Whale wallet movement. Keep monitoring addresses holding 1 KBTC or more. 2. Net exchange flow. Bullish if BTC continues moving out of exchanges. 3. Derivatives funding rates, stay cautious if they spike too high. 4. Global headlines, especially about ETF approvals or regulatory updates. In summary, Bitcoin is showing strong bullish signs backed by on-chain fundamentals. But smart trading is all about timing, risk management, and being prepared for both ups and downs. Stay informed, stay sharp, and let the data guide your decisions. Thanks for watching Crypto Plus Insights. If you found value in today's on-chain update, don't forget to like, subscribe, and hit the bell so you never miss a real-time crypto insight. Stay sharp, stay data-driven, and we'll see you in the next one.